Hi everyone, welcome to 2.4. This is the finance one. I would imagine for some students this is the one they're least looking forward to, and for some other students it might be the one that they think might be the most easy. This is about making financial decisions, so this is about the finance department. There are only two topics: business calculations and understanding performance. Business calculations, it's not too bad actually. There's only a couple of key terms you need to be aware of, a few little calculations, and actually for the most part the calculations are pretty straightforward, and it's worth bearing in mind that they're actually not worth a huge amount of marks. For example, if it's a calculation question, it's more than likely going to be a 2-mark question, and you might get one or two of those on the paper of this topic, I should say. And so the best bit of this is if you get them right, you can absolutely maximize your marks. You can get 6 out of 6 or 8 out of 8. But if you, for example, don't know one of the formulas, it's not the end of the world because you'll only be losing potentially 2 marks. Nonetheless, we want to make sure that we're getting those easy marks. And so with this one, I would recommend grabbing a bit of paper and a pen and a calculator as well, because as we go through it, we're going to do a few little calculations. We're going to do one example of each, and I'll give a little bit of a space that you can pause the video and do the calculation if you want to practice it. So, business calculations. There's a lot of calculations in theme 1. In particular, we look at profit, we look at costs, we look at cash flow, we look at things like that. This is where we step it up a little bit and we start moving a little bit more towards how profit really works. So that general concept of profit, where our revenue minus our total costs equals profit, that's fine for theme 1, but it's a bit of a simplistic view of profit, and actually what we need to understand is where businesses make their profit. So we're going to look at the difference between gross profit and net profit, and we're going to do this by looking at this table, because this ultimately is what it looks like. We start with our revenue, and our revenue is the money we've generated from sales over a period of time. So let's say, for example, that this is over the course of a year. So in this situation, let's say that our revenue over the course of a year is £600,000. So that's how much we've made from selling goods and services to our customers. Our cost of sales, these are the costs that are involved in directly making the product. So our cost of sales are, for example, our materials, like the things that go into actually making the physical product. So for example, if we're talking about like a t-shirt, the revenue is obviously how much we sell the t-shirt for times by how many t-shirts we sold. Well, the cost of sales is going to be how much we spend on the direct costs for each t-shirt times by how many t-shirts we sold. So let's say, for example, that our cost of sales are £200,000. That's what we've spent on actually making the t-shirts. We've then sold them for 3 times that for our revenue. That gross profit is as simple as that, right? Gross profit is our profit after we've only taken away our cost of sales. So revenue minus cost of sales equals gross profit. So naturally, and I'll pause for just a few seconds so you can do the calculation. You don't even need a calculator for this one. What would our gross profit be? 600 minus 200 equals £400,000. So we've made a gross profit of £400,000. So what that effectively means is, of the £600,000 that we made from selling the goods and services, our revenue, after we've just paid off those direct costs, we've kept £400,000. But of course, that is not complete profit, because we know that we're going to have to pay our fixed costs. And so this is where things get a little complicated. Cost of sales is usually mentioned as cost of sales, but operating expenses can have a few interchangeable terms. They might say operating expenses plus interest. They might say kind of fixed overheads or something like that. But ultimately what we need to know is that these are our other costs that we have to pay for that aren't directly involved in making the product. So let's say that, for example, these are £300,000. So if our gross profit was £400,000 and then these costs are £300,000, our net profit is naturally going to be £100,000. So as we work down this table, we are taking away different layers of costs and we're finding out how much profit we made. Now, the thing to be wary of here is actually, I think that bit's pretty straightforward. I think once you understand that and you can do those calculations, and certainly if you can see it as a table, that's pretty straightforward. But they do make it a little bit more complicated. So the first thing that's worth bearing in mind is they might not give you the full table. So they might, for example, give you a revenue in your gross profit, but they won't give you your cost of sales. Well, it's always in order. So if our revenue is 600,000 and our gross profit is 400,000, then we know we've taken away our cost of sales. So we can work it out by taking our gross profit away from our revenue. That would give us our cost of sales, because our cost of sales is the difference. Similarly, if we're given our gross profit of 400,000 and we're given our net profit of 100,000, we will know, but not our operating expenses, we'll know that our operating expenses are the difference, and so we can work out right? Well, the difference between 400,000 and 100,000 is 300,000, so that must be our operating expenses. Sometimes we might be given pieces of information, we have to work out other things. For example, if we know that our gross profit is 400,000 and we know our cost of sales is 200,000, well, we know if we rearrange that calculation and we add your cost of sales to your gross profit, you'll get your revenue. So that's the first bit. That's gross profit and net profit. Pretty straightforward calculations, pretty straightforward concepts. The profit margins is where it gets a little bit more complicated. So our profit margins are basically what percentage of our revenue do we keep as gross profit? We know our gross profit is £400,000. We know our revenue is £600,000. What percentage does that represent? What percentage of our revenue does that gross profit represent? Now, the calculation is really straightforward here. The calculation is simply our gross profit over our revenue times by 100. So if we're finding out the what is X as a percentage of Y, we're going to do X divided by Y times by 100. Net profit margin calculation is exactly the same. Net profit over revenue times by 100. So the benefit here is to memorize your profit margin calculations. You only actually need to memorize one, and then just remember that it's the type of profit you're looking for over revenue times by 100. So let's do those examples. I'll give you a second. If you can pause the video here. I'm not gonna sit in silence for 10 seconds because that'd be a bit awkward. But you can pause the video and you can have a go at doing those two calculations. And then if you press play again, I'll go through the two answers. So our gross profit margin is going to be 400,000 over 600,000. I've done 400 over 600. I've taken the 3 zeros off, but same thing. Times by 100 should get us 66.7% or 66.67% if you went to 2 decimal places. And then our net profit margin is going to be 100 over 600 times by 100. And that gives us a percentage of 16.7%. So what that means is that after we paid our direct costs, our gross profit margin is what percentage of our revenue we've kept as gross profit. So we've kept, after paying off our costs, 66.7% of that revenue. And then after we've paid off all of our costs, our net profit margin, after we've paid off all of our costs, we keep 16.7% of our revenue. Now, naturally here, because this is about profit, we want our profit to be as high as possible, and we want our profit margins to be as high as possible as well. But we've got to bear in mind that if it's expensive to manufacture a product, or it's expensive to run the business, we are going to obviously lose a bit of our profit margins. So when you see profit margins, this is what we're referring to. So hopefully that's pretty straightforward. If you want to practice that, if you just come up with different numbers for the bits in orange that I've got in my little table, you can then calculate the bits in red, and then you can do the two profit margin calculations. Really, really easy. You can just make up whatever numbers you want. As long as your revenue is higher than your costs, then you're okay. Average rate of return, a little bit more complicated as a concept, but the calculations is really, really straightforward. This is, if we have an investment project, what percentage of the cost we spent on the investment do we earn as an average profit? So for example, if we said that we had an investment of £1 million and we had an average annual profit of £500,000, that would be 50%. That means every year we get 50% of our investment cost as profit. Quite a complicated concept, one that comes up again in A-level with a few other little calculations and a similar kind of theory. But let's just go for an example, because they typically, in the GCSE papers, give you the questions pretty straightforward. They don't kind of try and trick you with these. They just give you the labels because it's a difficult formula to remember. So let's say, for example, if we had an investment of 400,000 and that project could have been for manufacturing a building or something like that, and every year that generated us £100,000 profit, then we would do 100,000 over 400,000 times by 100 equals, you probably guessed this one, 25%. So naturally with this as well, because it's about profit, we'd want that to be a little bit higher. The higher, the better. The higher, the more profit we made. 2.4.2 is quite a straightforward one, really. It's because it's a lot of information you'd already be familiar with, and the main part of this is using graphs and charts. So this is a little bit of a recap, really, but what it does is it introduces a really important part of paper 2, which is that you have to be able to read charts and interpret information. And so quite often you'll see you might get like a graph or a chart, and you've got to be able to read it to get maybe like a 1-mark answer. They can be really, really easy marks to get if you can find your way around these charts. And thankfully, because of your GCSE maths, you'll have a big familiarity with a lot of these. I'm going to apologize right now for my drawing of these charts. I could have put actual charts in, but I thought, you know what, I've gone with this kind of handwriting vibe the entire way through these videos. Why would I stop now? So We've got our line graphs, and I told you, look, I'm not an art teacher, guys. Sue me if it's a problem. And that's an example of a line graph. We've got, there's loads of benefits to a line graph. We're going to talk about those a little bit more at the end when we talk about which ones are better for different types of data. But that's great for showing a trend over time. We've got bar charts. And we've got pie charts. So you've probably had quite a lot of familiarity with these. And the key thing here is understanding which ones are best for different things. So for example, if we're looking at a trend, if we're looking at sales over time or profit over time, and we're looking at trends to try and identify whether things are getting better or worse, then a line graph's perfect for that. Because we could look at the comparison of different businesses, we could look at a comparison of revenues, we could look at a comparison of costs, we could look at a comparison of profits, and we can make judgments about when things went well, when things were growing in trend, when things were maybe getting worse in trend. If you're trying to make a comparison, then a bar chart would be ideal. So for example, on that one, we've got two criteria. We've got A and B, and maybe you could say the red one is one business, the blue one is another business, the green one is another business, or it could be countries. The red could be the UK, the blue could be France, the green could be Germany. And then you can make a direct comparison on certain criteria based around the bars and how high the bars go. And naturally on the y-axis, there'd be a figure to kind of maybe make that readable. So if you're looking for a comparison, then bar charts would be really effective. If you're looking for proportions, then pie charts are the best one to look at. So for example, one of the most common ones is like market share, for example. If you're looking at market share can be easily split by pie chart. You can see how much of the market a certain business gains in sales. So with that one, for example, the market leader would be the one that has the blue one, the 40% one, and then that might be useful for analyzing the market. Quite often, they will ask you to identify which is the biggest or smallest or second biggest or something like that from a pie chart. We've seen that in past exam papers already. So make sure you can read these. But hopefully from your maths, you've got a lot of transferable skills in that. The key thing is understanding what a business might use them for. We also have financial data. Now, financial data, we've already talked about a little bit here when we talked about our gross profit and our net profit. But the key thing is, can we, using calculations, identify strengths and weaknesses? Can we identify whether the business is in a good financial position or a weak financial position? So there's not too much in that really, other than to make sure you understand the calculations. But more importantly, make sure you know what the calculations mean, not just being able to do them. In terms of marketing data, we're going to get this from market research, which is a nice little opportunity to just throw back to a little bit of theme one, thinking about what our market research is. Remember, we've got primary and secondary market research, and this could be data like, for example, market share. It could be market size, and there's a few things that are worth bearing in mind here. For example, you might look at a business that has, a 5% market share, and you might think that business is quite small. And you might be right, compared to other businesses in their market, they might be quite small. But what's worth bearing in mind is, if you are 5% of a market that is worth millions and millions of pounds, that 5% is still going to be worth a lot of money. Whereas if you've got maybe 50% of a market that's really, really small, you might actually be better off having a smaller market share in a really, really big market. So it's just worth bearing in mind that when we look at marketing data, there's a little bit more to it than just saying bigger is better. We've got to think about the context. We've got to think about the size of the market and things like that as well. Of course, when looking at data, as useful as it is to have this kind of quantitative data to make decisions based around, there are, of course, limitations to data as well. So, for example, a lot of the data is based around projections. And so if we're making projections, will those projections come true? But also, a lot of businesses make poor decisions because they maybe prioritize the wrong pieces of data. So it's not just about that. It's about making sure you know which piece of data is the most important. So, for example, you might do like a pros and cons list about launching a new product, and you might have 6 pros and 2 cons. So in theory, you could say, right, well, we've got more pros than cons, so let's go with it. But actually, one of the cons might be a total deal breaker. And so it's just worth bearing in mind that when we're looking at data, we shouldn't just say, right, definitely the data says this is the case, so it's definitely the case. We've got to be a little bit more clever than that. So with this one, best bit of advice I can give you is to do some practice questions on these. So have a look at past papers and have a look at pieces of calculations and see if you've got some calculation resources you can use to do some of these and to give it a go, because confidence with the calculations only comes from practicing them, from memorizing and using flashcards to practice the key terms, and from sort of getting a chance to practice them in action and make sure you know what they mean. Hopefully this has been useful. keep a check eye out on the channel for the other Theme 2 videos and the Theme 1 videos. And if you've got any questions, let me know in the comments and I'll see what I can do. See you next time.